Thanks for coming in.
Hey, no problem. Thanks for inviting me.
You call this all-time high situation a gift. What do you mean by that?
It really is a gift, right? If you look at where we are in the market today, right? You've seen a very strong rebound over the last few months on the idea that tariff talks are going to work out, and we're pretty much priced to perfection at this point, right? Like, as in, those trade talks better come out perfect, and if they don't, you're going to see a sell-off. Plus, you're coming into the summer months. And summer months have historically been lower volumes, which means any impact gets magnified because of those lower trading volumes, right? And so what we're advising clients, and I think what people should really be thinking about is, let's not worry about the noise of the tariff wars. I think go back to kind of first principles where you think about, okay, what can I control versus what can I not control?
Okay, so what can investors control?
They can control their portfolios, and they can basically worry about or take care of the risks that's associated to them and their loved ones.
Okay, so let's talk about what is riskiest at this point,
right?
And keeping in mind that even on the weekend when it was like, hey, we're not going to negotiate with Canada anymore because of X, and then Canada saying, okay, fine, well, we'll reset the tax. Like that kind of talk is happening every day.
Right.
So what are the portfolio parts you see as being the riskiest, and perhaps people need to claw back a bit?
Sure, and I think the answer to that is, you want to look about what do you want in your portfolio, right? And so, the modern day idea of what's a well-diversified portfolio is look at it and think about, okay, I need to have 3 asset classes. I need stocks, I need bonds, I need alternative investments, right? And then part B is you want to look at those 3 and think about, do I have the skill set, the time, and the knowledge to manage each segment of it? And so, you might ultimately come back and think about, hey, I'm great at stock picking, I love stocks, hate bonds, hate alts. In which case, outsource your alts and your bonds, manage your equities, right? So it has to be a holistic thought pattern where you think about, how do I defend myself? How do I protect my portfolio? How do I take care of the people I love most in my life, right? I mean, that's got to be the core of all of this. And so in terms of, what's overpriced at this moment, it's clearly equities, right? You've pretty much got a full rebound. It's back to all-time highs, and it's almost like the trade war is non-existent at this point. And so that's a little too cozy, right?
Okay.
And so, you're in, and that's your gift in that, you're priced to perfection.
Yeah.
You've made back any potential losses that you may have had. And so it's a great time to think about it, maybe pare back positions in equity.
I call that take it and run, yes. Okay, so perhaps take the profit that you have right now.
Exactly. I'm not suggesting you liquidate your entire equity portfolio. I'm just saying you want to look at it and rebalance, right? Where, if your equity portion is supposed to be 40% or 60% of your portfolio, given the rebound, it's probably over that. And so you probably want to cut back equities by, say, 10%, reallocate to other positions, right?
Okay, so let's talk about sort of practically how people can move forward to reduce their risk, because we're talking about the equities being sort of high value right now. Maybe you want to take some of the money out and hold or put it somewhere else or rebalance, as you say. But moving forward, what do you do with equities? Considering, as you say, we're here now, should we just expect a little bit of a slowdown?
No, I mean, I think what you want to do is you want to take a look at it. And I always say this, like, the best time to think about it is when you're more calm. Like, you haven't lost any money, things are okay, and you want to think about it. And there's probably a lot of people who don't have alternative investment exposure, right? I think a lot of people grew up in the world of a 60-40 model, which is...
And what would be considered alternative?
Alternatives can be a whole host of products, including private debt, private equity, hedge funds, pre-IPO stocks. So it's a pretty broad segment. But the beauty of alternatives is that they're volatility dampeners. So they just basically reduce the entire portfolio volatility, and which helps you calm down a bit. You know what I mean? So, as the market ebbs and flows, it impacts the portfolio less. That's why you see every institutional investor on earth pretty much have an allocation to alts at this point, right?
Okay, because I find most people don't necessarily think alternatives, they think stocks and bonds.
Right.
So how would you open their mind to alternatives? Obviously, you said it takes some of the volatility out of what you are investing in.
Right.
But where would they begin?
Where would they begin?
Do you know what I mean? If you're looking at alternatives and it's not something you're used to investing in, where would you start?
I mean, I think there's a lot of good material on just, alternatives as a segment. The other one, look, the easy call your financial advisor, call a portfolio manager, or call a firm like ours. I think Larry Berman was on your on your call before me. Call Larry. There is a host of people that can give you that advice, can get you help get you educated about alternatives, why they're good for you, and why they deserve a sleeve in your portfolio effectively.
Clearly, some investors are going to say, I don't want to miss on any extra gains, right, that are possible since the markets are doing so well. TSX is hitting a high, S&P just hit a high, the Nasdaq's hitting a high, and so there's that fear as well. How do you counter that? Because you have to.
Absolutely. And the way you counter it is by saying, well, it's not just about the upside. If everything just went up, but we wouldn't need anything else, would we? Right? So you got to think about how much you're willing to lose. Right? And so nothing goes up forever in a straight line.
And in your mind, you sort of set what you're willing to lose?
Exactly. And that's effectively what risk is, right? We talk about risk in so many different ways. At the end of the day, it's like how much money you're willing to lose.
Yeah.
Right? Like that's risk, right? And everybody's, high risk till they lose it all. Then suddenly they're not so high risk anymore.
Yeah, then they're more careful.
Yeah, exactly.